The ability to have a supercomputer in your pocket for $1,500 is something that every generation before us would have thought was a dream that could never have been realized. And that's been made possible by the US-China economic relationship and that deepening of the supply chain ties. I'm personally not quite ready to say that era is over. The openness of global markets has been a huge benefit for US companies that's flowed to the US consumer from the global integration and the spread of globalization. We'll see where that political conversation goes and how it evolves, how much of the current discussion around tariffs is a longer term part of this rolling back of globalization versus negotiating for deeper globalization, which I think could be a surprising outcome.
Welcome to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest topic of all, money. How to make it, save it, keep it. But our conversations lead us to an even bigger question, what it means to live a rich life beyond money. My guests share their practices, principles, and evergreen wisdom. I'm your host, Bogumil Baranowski, author, TEDx speaker, and investment advisor to wealth creators with patient capital and an infinite investment horizon. I work with families and individuals who aspire to grow wealth over a lifetime and generations through disciplined, thoughtful investments in durable quality businesses, while giving money meaning. Join me on this quest to unearth and share the wisdom of the ages. Let me share with you the podcast program disclosure statement. Blue Infinitas Capital LLC is a registered investment advisor, and the opinions expressed by the firm's employees and podcast guests on the show are their own and do not reflect the opinions of Blue Infinitas Capital. All the statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. The information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. The information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. None of what you're about to hear is investment advice. My guest today is Rick Carew. He's a seasoned journalist, investor, and educator with over a decade of experience covering Asia's financial markets for the Wall Street Journal, who now advises investors on US-China economic relations and teaches value investing at Fordham University. Rick, how are you? So nice to see you again.
Great, Bogumil. Thank you so much for having me on the program. I really am excited to be here and appreciate the invitation.
So you and I met at the Value X event in Charlottesville about a year ago now, and it was hosted by our mutual friend, Jeff Henriksen, who's a wonderful person, and we were having a Jeffersonian dinner as part of the event, and it was in a beautiful old bank building. I love those buildings. And we had such a fun conversation. I thought, I want to have you on the show, and I want to talk about investing. I want to talk about China. And those topics, some of those might be more timely than I expected, as much as this show is evergreen. The intention is to make it evergreen, but I want to dive right in, if you let me. You know that I like to kick off those conversations with the early days. So I want to ask you about your childhood upbringing and how you think that time shaped you. If you want to talk about money, relationship with money, and the career path that you chose.
Sure. Well, and really appreciate people like yourself who build community, whether that's in investing or in other fields. And the Value X Charlottesville community is really something special. So glad to be able to reconnect outside of that community. In terms of growing up, I grew up in Richmond, Virginia, which is a wonderful, wonderful city on the East Coast, about 2 hours south of Washington, D.C. And it's a place where I always felt like it was a wonderful place to grow up and start a family. My parents have really made it their home since they met during college. And coming up in a place like Richmond, you have access to the world, but you're not in a place like New York City or in a major metropolitan area where you feel the pressure of, being at the pinnacle of finance or business. There's some great businesses that have grown out of Richmond, Virginia. There's the Markel Group, which is the leading global insurance company. There's some others. Philip Morris was based here for a long time. So it's a place with a strong business community, but not in New York City or Washington, D.C. And growing up, my family was in the food and wine industry. My father owned a wine store. My mother was part of helping to make that operation work. And through that, I really learned a lot about entrepreneurial spirit and how to think differently about building a business. My dad is an amazing marketer. He brought a lot of European wines to a community like Richmond, Virginia for the first time. And as there were some executives like Philip Morris executives who had exposure to the fine life in New York, he was able to really be a bridge for them to the nice things that they enjoyed from Europe. And so really growing up in a small business really gave me a lot of entrepreneurial spirit, self-confidence, and also the interest in travel, which was something that came from my high school education, where I had a chance to attend a school which is now called the Maggie Walker School. And it's a select school that you have to apply to get into. And they offer languages such as Chinese and Japanese language that you can't really find at most high schools in the United States. And so that plus an opportunity to travel to Japan when I was in middle school really gave me a chance to start to see the world as a young person. And that opened up my world to different cultures, different ideas, different ways of living that really encouraged me to explore that more in my life and business. And in terms of relationship with money in my youth, my parents were always very much supportive of following your passion, but at the same time, understanding how to run a business. And so I got a chance to operate a cash register in my family business when I was, a young person, and also understanding the value of service in business. I would go on delivery trips with my father to deliver wine to some of his best customers. And as a part of that, I would earn a tip. And that was my way of saving money and learning the link between building wealth and customer service.
It's such a wonderful experience to be able to see a business, a working business from inside, right? What makes it work? How does a profit work, and inventory and all those pieces? So it's an incredible education for somebody that ended up in investing. But before I ask you about investing, Chinese language, Japan, tell me more. What was that like, and how do you think it influenced you? It's not an easy language to learn. Do you speak both? Did you learn both?
I did learn both. I do speak both. My Chinese is better than my Japanese at this point, but Japanese was my first engagement with Asian languages, and I love them both. The ability of a language to unlock a different culture and a different mindset is something that really shaped me very early on. And understanding and learning a language does a few things for you as a person. One is it instills a discipline. Learning any language really requires a lot of hard work to get out of the gate. And so I still remember a time when I was a student at University of Virginia. Each morning I would wake up and study my Chinese flashcards over breakfast at the dining hall. And that really built a sense of discipline and hard work that if you're going to become good at a language, you have to put in those hours. There's no way of getting around that. And then the second part of it is really having a growth mindset. So thinking about tackling a problem like a beginner, or you could say having a beginner's mindset is another element of that. And just being willing to not know everything, not having yourself as a fixed entity where you really expect yourself to be perfect when you start. And I think a lot of people can learn from studying a language, a lot of skills beyond just being able to communicate.
A lot of great lessons for a future investor too, I think, in learning a language. But you pointed out something really fascinating, that a language is not just a language, it's also the culture. So when you're learning Chinese or Japanese or French or English, you embrace, or you get exposed to, in a different way, to the culture and even the way people talk about things. And, you know, English is not my mother tongue, but I don't remember not speaking it. I learned it very early on. And I realized that I speak in English in a different way than in my mother tongue, which is Polish, and in French, the language that I studied in for quite a while. I realized that the language has an influence on who we are, or the way we express ourselves at the same time. So in English, you can be very excited. I'm looking forward to talking to you. In some other languages, it would be over the top to say that. So there's certain nuances where you realize it's not word for word. You have the cultural context too, which I'm sure it's something that you noticed once you moved to Asia and lived in Asia for quite a while. What was it like to come from Richmond and move to Asia and try to communicate and maybe try to fit in?
Yeah. Well, and I think there's really I always come back to having a child's mindset. So when you talk about the way you communicate in different languages, for me, my engagement with Chinese is through almost being like a child and just learning and curious and asking questions. And being a journalist, that's a great fit, right? Because your job is really to ask questions, and then you try to spend your time picking up the pieces of the answer and fitting them together into trying to create a narrative around what someone's communicating with you. And so definitely I feel like your experience is not unique in terms of having a different, way you interact with the world through a foreign language, or a language that is not your mother tongue. And so just overcoming that shyness and the ability to engage with the world through a different lens, I think is really, really valuable. And the way people see the world, the way people think about different concepts, the translations that seem so simple, but in reality, they have a different cultural meaning. And Chinese language, because it's an ideographic language, there's a lot of meaning and history and context within the words when you read them. So for example, the word good is the combination of the characters for mother and child. And so if you think about that, that's a pretty powerful statement about, what is good. And that's embodied in the language. And whether people always pick up on that nuance when they use it in a daily conversation, at some level, it's embedded in the language that we have. And just the way that English carries so many traditions from Roman culture and the Latin language that it's derived from.
Somebody pointed out to me that in English, in many cases, there are two words to describe a similar thing. And one is the original English, and the other one is Roman, you said Latin, French. So we say kingly or royal. We say beef, but then a cow. So there are words in the, fraternal and brotherly. And it's fascinating that I don't think in Polish there are words that are borrowed from other languages, but there's none of that duality that you could almost use one or the other. And they have a subtle difference in how they sound and how they're perceived. Languages are fascinating, and I think it's a window to a whole new world, but it's also a humbling experience. And I like that aspect that you mentioned of being a beginner. You're always learning. And with investing, assuming at any point that you know everything is a dangerous idea, and you always have to be learning things. And you're not only learning, but you're also teaching value investing to students. And I'm very curious about the experience. What's it like to teach? And I had some experience teaching interns, but you're doing it full time with students. And the second thing that I want to know, I'm curious about, is how you see the evolution of value investing, because you have quite a challenge in front of you. You want to teach the original Ben Graham ideas, and then you want to move to the future and talk about growth and tech, which we're going to talk about in a minute. Talk to me about the teaching experience and that evolution of what value investing even means.
So I completely agree that teaching is the best way to learn. So one of the things about teaching is that before you teach something, you've got to learn it and master it. You know, the art of being able to explain something to somebody else is really when you have mastered or gained fluency in a concept. And so teaching value investing is just something that I've always had a passion for. I studied at Columbia Business School under Professor Bruce Greenwald, who's really the keeper of the flame at Columbia from Benjamin Graham and the tradition of value investing from the beginning. And I had a chance to work with him and serve as a teaching assistant for Tano Santos, who's inherited the program from Bruce. And that being able to be a teaching assistant for that course really gave me the introduction to what it would take to be able to teach it well and learn from those two great professors. And so at Fordham Gabelli School, I have the opportunity to be in New York City and teach young students who are going into the investing world how to think about valuing companies and how to think about markets. Those are really the two key tasks that I see. And one of the things that I always come back to is there's so many resources available today to young people who are eager to learn, whether that's the Talking Billions podcast or whether that's other sources of information, newspapers, magazines, books that are available, very cheap prices and very accessible at libraries. There's so much out there. And really, I find one of the key things that I have to do is to make sure you point students in the right direction, to stay close to the fundamental technique of valuing companies, not to get caught up in momentum or meme stocks. And so a lot of it is really channeling the energy that young people have in the right directions and making sure they're getting exposed to the right material and inspiring them that it's a meaningful career to go into investing. There's a lot of competition for talented young people to go into technology, computer science, engineering, marketing, other fields, and really convincing them that value investing is a valuable field of study, I think is really important. And beyond just you could make money doing this, because there's a lot of ways for smart young people to build a career that can generate wealth for them. So that's a big part of it. And in terms of understanding the role of growth within investing, which I think is one of the challenges you mentioned, it's something that I think the value investing framework has been very slow to adapt to. And that's one of the things that we're trying to do at Fordham, is to push the study of value investing towards incorporating growth within the framework. And my colleague Paul Johnson there at the Gabelli Center has done some really interesting work on how to adapt that framework. And I'm happy to talk more about that and how we think about it at Fordham.
I have so many thoughts. I don't know where to start. Well, first of all, I'm thinking of Ben Graham and how he said that, I'm paraphrasing here, how much the world is changing. He was talking about technology, whatever technology was at the time, but the human behavior behind it is the same. So for me, it's one of the building blocks. Everything changes, but then a lot stays the same. And the big point that you're making, value is investing as such. And to me, there's only value investing. Why else would you buy anything else if not for its value? How much you're going to pay? What's it worth? A very simple idea. And I noticed that either it just clicks or it doesn't. Or some people come around to it. I notice how they get burned on trying different things and they come back to it. And the part that I like is that you can take those ideas and put in a lot of self-expression into it. And even at the ValueX conferences that we both attended, people come and they go about it in many, many different ways. And I can imagine students coming to your class, listening to you, learning from the greats. They'll walk out and they'll do their own cooking, so to speak. And you can't even imagine what they will do with it. But if the principles are in place, I think they're, as you said, pointed in the right direction. Is that how you think about it?
Completely. And I think the way we really try to anchor the study is really around analyzing the fundamentals of a business, right? So to me, and I think the way that we try to teach it at Fordham is connecting the fundamentals of a business with market perception or market misperception, which is where things become even more interesting. And you're exactly right. You want to leave room for every investor to look at industries that they care about, consider different approaches. So everything from special situations investing, which can be a very good fit for certain people who love to read documents, love to see immediate results, to those who like to look at compounders, right? So long-term companies that are great businesses where you might be somebody who loves to study the fundamentals of a business or a management team, which is very different than special situations where, yeah, the management team is important, but it's probably not your biggest focus. It's really on a catalyst that you have in the near term. And both of those, I think, fall within the underlying framework of value investing. And really where we try to distinguish value investing from other fields is really a focus on the fundamentals of a business and not the momentum or the flows of capital, into different markets, which is important for investors to know. But I think if you go through an investing program and you don't have the fundamentals, those are, the fundamental valuation analysis is what gives you your base for really understanding a company and its value and gives you the conviction to be able to hold that when the market might disagree with you.
And I think that's the most important point. So I manage money for families, long-term patient capital, multi-generational wealth. And in moments of crisis or panic, the fact that I know what we own and they know what we own gives us confidence to hold on to it. That's the simplest way I look at it. I'm curious if you spend some time in your class talking about the money your students will end up managing.
Yes, so we have one course which is really focused on doing this. It's called the Student Managed Investment Fund. So the students literally have an opportunity to manage $2.3 million worth of the Fordham Endowment's capital. And they have to think through those issues such as asset allocation, when to trim a position, when to sell a position, at what times might an ETF for a sector be more appropriate than owning individual stocks when you don't have conviction on one particular company outperforming, but you want exposure to a sector? How do you think about global versus domestic opportunities? How do you think about fixed income versus equities in a portfolio? And so all of those issues are things that we wrestle with. And it's really great to see the students sort of think through how to allocate. And especially when we've had periods like recently when there's been a lot of turmoil in the markets, how do you respond to that psychologically, and how do you manage your emotions around investing? And so, we're going to have you in as the guest speaker to talk about how you do that, Bogomil. But we definitely try to help the students sort of think through in a longer term way. And I have to say, I've been pretty impressed with our students and their ability to hit the pause on emotional responses and to understand when it's a good time to be conservative in the markets, because we've had a market that's only gone up for young people's short investing careers. And so for them to really understand that the market can be very different than a 15% plus annual rise each year, like clockwork, is something that can be a bit challenging. And I try to steer them a little bit in that direction to think more conservatively when we read things like we read this semester, Edward Chancellor's book, Devil Take the Hindmost, which is about speculative manias and bubbles, and reminding students that while history doesn't repeat, it does rhyme. And the power of seeing what's happened in history can be very beneficial, particularly for managing emotions and exuberance in markets.
You're touching on so many fascinating things. First thought that I had was when you're actually managing real money, something changes. The hypothetical, this is a good idea, this is a bad idea. That's different. But when you put actual money and then you start to decide, is it a small percent position or is it a larger position? Something changes. The commitment changes there. And I think it's a wonderful idea for your students to have that kind of an exposure because it feels more real. So many thoughts and so many ideas, but a real life experience changes everything. I want to tie it back to what we talked about, your experience as a journalist. I had Eric Markowitz on the show, who was also an investigative journalist for a while, and we had a fun conversation about the fact that you can learn so much in that field that you can then deploy on the investment side. And you spend a lot of time at the Wall Street Journal in Asia. I'm curious, what have you learned? What are some of the techniques that you can deploy as a fundamental-based research, investor?
Yes, definitely. I think the tools of investigative journalism are incredibly valuable for every investor to think about how to incorporate in their toolkit when they approach a company. The first that might sound very basic, but is something you learn on your first day as a journalist is the willingness to pick up a phone. And for a lot of people in today's society, there's a fear of reaching out, cold calling, sending that email to somebody you've never met before, asking to connect with somebody on LinkedIn. And one of the things as a journalist that you have to do on a regular basis is you have to engage with people who you don't know before, who aren't put in front of you by somebody else, aren't prearranged. You've got to just go and do that shoe leather investigative work by talking to people and learning from other people. And that's where I find, curiosity. We've talked about curiosity in this conversation, the willingness to ask questions. I think journalists do a great job of trying to really think hard about what are the important questions. So going out there and reading what's been written about a company before, and then considering, what does nobody know? What is missing in the body of knowledge about this company or industry? And then once you do that, going, well, where are the people who have that knowledge? Is it the executives of the company? Is it their competitors? Is it their suppliers? And then really developing a plan to find the answers. And so that's one really important part, is just learning how to pick up the phone or being comfortable sending a cold email. And it's something I ask our students to do in class, is to go out and find information from people. One of the easiest things that students can do, and I think every investor should think about how they can incorporate, is doing a basic survey of consumer demand. Every product has consumers. If you want to make a statement about what demand is, asking the IR person to tell you what their demand is one way, but probably a more valuable way is to actually ask the consumers themselves, or who's buying the product. Why are they choosing the product? What are their incentives? Would they buy it if they raised the price? Would they not? And I think that can be really valuable for all investors to look at. And then sort of on that same front, I always encourage people to not shy away from engaging with management. One of the things you hear professional investors say all the time is that I don't speak with management teams because they might influence me. They might, I might be persuaded by their charm.
Mm-hmm.
To me, that's a really lazy way to approach the problem, which is that saying I have no ability to be skeptical or analyze information, so I'm just going to avoid the conversation to begin with. And what I always say as a journalist, you interview people all the time, and part of your process has to be to combine information that you get from an interview with the information that's in documentation, financial reports. What do other people say about the company? And so by using multiple sources, whether they're data, analytics, conversations with a company, conversations with competitors, you create a mosaic that helps you to understand the company better. And having a skepticism with what they say, as opposed to just management told me this, therefore it's true, is really the way that you distinguish yourself as a savvy investor and build that mosaic that you need to really understand the full picture of a company, not just one perspective on a company.
I was thinking of Phil Fisher, Common Stocks and Common Profits. It's a book that I gave out to interns over the years on many occasions, one of many books. When I'm listening to you, I'm thinking about going to the source and not being shy about going to the source. And sometimes it's very, very basic. Pull up the annual report. See how the company and the management talks about the business they're in. I'm under the impression that fewer and fewer people actually do that. The second thing you pointed out, reaching out to the management. In the early years, I remember going to conferences and one-on-one meetings with managements of so many companies. And I find that time of my career as very, very formative. It allowed me to sit down with people that are running those businesses and ask them sometimes still, immature questions, but I learned real quick, to the point that some management said, can you stay behind because your question was really good? So I remember those moments where I felt as a kid, 20 something, I felt, wow, they appreciate what I bring to the table. But anyways, going to the source, going even to the store and see how the store feels. You're about to commit some real money to this investment. If there's a chance for you to go and interact with the service or the good, subscribe for it for a month, see what it's like. And as you said, talk to people that are using it. And completely. I think you can learn so much more than...
Yes. And it's talking about interviewing and engaging with managers. There's always two questions that I find very few people ask, but I've always found to be the most valuable. So I'll give away one of my secrets here to your listeners. The one is to always end a conversation with a management team with, what question did I forget to ask? Or what question is an important question that I didn't ask? And the number of times I've interviewed people, and that's where they give away something that you would not have thought about because, they hadn't discussed it in their previous reports or the previous earnings call, or, there's an accounting change that's going to affect the way that our earnings get reported next quarter. Oh, well, there's no way you could know that because, they're the insider of the company and they're dealing with this stuff day to day. And you're just naturally, by the way things work, you're working off of what they've said before, which is weeks or months old information. So asking them what question I should have asked that I didn't ask you, I think can be very, very telling. And the other question that I always find, and I think Warren Buffett has talked about this before, so I should give him a little bit of credit for it, is if you had to invest in a company in your industry other than your own company, which would you invest in and why? And one of the great mistakes I think investors make when they do an interview is they only want to ask about the company that's in front of them.
Right.
It's natural. You're talking to CEO of a business. You want to learn about their business, but they of course operate within an industry context and they know a lot of other businesses. And so why wouldn't you take the opportunity to ask them, who's your best competitor? What are they doing right? Why would you invest in them? And while it may be a little bit awkward to ask somebody about something that's not what they're doing, you will get so much more insight from that question about all the other companies in the industry, because if you ask everybody in the industry that same question, inevitably you will get to the answer of who's the best operator in any industry, because they all know they spend their days comparing themselves with their competitors. No good CEO ever just looks down and focuses only on their own business without considering the competitive landscape. So don't be afraid to ask them that question about their competitors, and you could learn quite a bit from that and from asking competitors about the company that you're most interested in.
I like both questions, and I think they're very helpful. I had this immediate thought when I was listening to you. I don't want to talk about passive investing too much, but I'll mention that if you pull up the ownership of any company out there today, a larger one, it's surprising or not that you'll see that a lot of the big shareholders are big ETF sponsors. So when you flip it on its head and you're wondering who is actually calling that company, and you realize it's a shorter list of active managers or sometimes individual investors that are actually curious, because an index fund doesn't do that kind of work. It doesn't have to. It's in the index or it's not in the index. So when you really think about it, and I had moments when I had shares of a company and I had somebody from the CFO office call me because they went down the list and they realized what looked like a small stake to me, it looked like it's a bigger stake relative to all the passive index funds that own that company. So I think there's something there that allows the smaller investor, or the, compared to the $1 trillion behemoths out there, to have a chance to actually talk to somebody who's making decisions and ask some good questions and learn something new about how this company operates. Oh, you have a thought?
I was just going to say, and just like I completely agree with that. And just like the executive who asked you, to stay after the meeting and learn a little bit, more about what you're thinking and the way you're analyzing the company, executives benefit tremendously from an investor's perspective. And index funds, as you said, are not going to provide that feedback on what's an appropriate capital allocation policy, or how do fundamental investors view a dividend versus a buyback. Those are really valuable points. And so, to the thrust of your argument, really, they want to know what you think as well, because this is how capital markets work. It's people who manage your capital and people who are allocating it. And in order for them to do the best job they can do, they need that feedback loop. And we're getting less and less of that in today's market.
They want to talk to somebody who actually read the annual report. On top of it, maybe even read the proxy.
Maybe not the executive compensation part, but everything else.
Everything else, and has a question or two. But there are people like that, and it's not just the two of us, so that gives me some optimism. I want to ask about China, and there are a couple of ways to go about it. I want to start in the middle. Looking from the outside, and you and I spoke about it before, I see the business, I see the politics, I see how they're connected and not, how they're friendly and not. How do you look from the outside, as I would, you were on the inside, and try to understand, how does this whole thing work? It's different than many other places that I'm familiar with. And what's your outlook? How does this continue going forward?
Yeah, completely. The relationship between the Chinese government, the Communist Party, and particularly private sector entrepreneurs, and how state-owned enterprises lay somewhere in between, including most of the largest banks in China, is a very complex ecosystem. And you're right that from the outside, it looks very challenging to understand. There's a great book by Richard McGregor, who's one of my former colleagues and friends. He was at the Financial Times in Beijing, and he wrote a book about the party and really how the party interacts with business. So I would encourage anybody interested in the topic to read Richard McGregor's book on the party. And there's an element where you have to think about it on two levels. One is, what are the incentives of the government, and what are the incentives of the business leaders? And so in terms of the government's incentives, on one hand, they want the economy to thrive. They want jobs to be created for young people who are graduating. But on the other hand, they have an impetus for social control, right? Political and social control. The Communist Party in China has a monopoly on power that is rare in Western democracies, where most investors are based or where they have an upbringing. And so to understand the importance of enforcing that social control, I think, is where a lot of investors get scared when they look at investing in businesses. You see these cycles of crackdowns in terms of corruption crackdowns, sort of policy restrictions on certain sectors. So in China, we've seen a crackdown on the online gaming industry when there were concerns about young people spending too much time playing video games rather than studying. We saw that crackdown on the education sector, where people were concerned that the education industry was charging too much for students to keep up and extracting too much money from young parents who naturally have a desire for their students to get ahead. And then to the technology sector, when there was some pushback over companies saying that Chinese regulators in the financial space were not keeping up with digital payments and the growth of the technology innovation that was going on in payments industries such as WePay and Alipay, two of the big digital payment platforms. And so we see this cycle of government crackdown as the government sort of sees a social problem created by business. And in general, those businesses have operated in somewhat less regulated situations than their peers in the West. And so the dominance of some of those major franchises in China has given the Communist Party and the Chinese government concern about the role and power that many of these monopolies or semi-monopolies have in Chinese society and in Chinese business. And so one of the things I always encourage investors to do when they think about the interaction between government and business is to understand they both have motivations where they want to work together, but their interests don't always align. The Chinese government does not want its businesses to be tremendously profitable. It wants them to serve society, but it recognizes that it needs them to achieve certain goals. And so I think it's really important for investors not just to throw up their hands and say, I can't understand any of this, and therefore I should just avoid it, because that's not the right way to grow your circle of competence, to grow your investable universe. And so I encourage people just to sort of understand the interaction between business and politics, and also to understand that these are cyclical factors that don't last forever. And so great franchises in China are not dissimilar to great franchises in the West because they are durable in a lot of ways. And I think we're starting to see that with some of the Chinese tech companies coming out of this cycle of regulation and crackdown, where they're starting to reassert themselves as strong businesses. And once again, always coming back to the power of the consumer and how are consumers spending their money, and is there demand for these products? You know, regulation and the back and forth between businesses and government are generally short-term cyclical issues rather than long-term, as long as the core of the business is still strong and still valuable for consumers.
It's confusing to look from the outside, and our conversations enlighten me a bit more how the two sides coexist and work, and they have different incentives, different goals. I'm curious about the tech ecosystem. You know, we're thinking of Silicon Valley, and I'm thinking of the future. There will be many more new businesses created. Now we have AI, and I think AI is like the internet of the era. It will just empower us to create more business models that we can't even think of. How is China going about their tech ecosystem, and how does it compare to the Silicon Valley mindset?
Yeah, it's a great question. I think one of the things to always remember is that China and Chinese entrepreneurs tend to be a learning machine. They're studying what's happening in Silicon Valley and they're adapting. Another investor mentioned to me recently that they actually sometimes learn more about developments in Silicon Valley from their Chinese executives that they interact with, or entrepreneurs they interact with, because they're so eager to learn about the cutting edge of what's going on in Western technology. And so there's obviously been a lot of technology transfer from sometimes from illegal practices in terms of trying to copy intellectual property from the West, but also the flow of students from graduate programs between the US and China, the engineering talent that goes back and forth. And so I always think about the Chinese companies as learning machines. And so thinking about how they can adapt best what's happening in Western markets or global markets, and then taking it a step further. And we've seen that in industries repeatedly, whether it's artificial intelligence, where we've had Chinese competitors like DeepSeek that have started to really show that Chinese artificial intelligence can be a powerful tool in comparison with OpenAI or ChatGPT and those type of platforms. And then the Chinese auto industry, which we've seen really embrace taking the manufacturing prowess that China has and integrating that with the technology and best practices that we've seen from Silicon Valley startups and electric vehicles and other places, and then further innovating on that because they have such a strongly developed supply chain ecosystem that's really been built to support all of the technology that we use, from our cars to our iPhones to our batteries to semiconductors. So all of that, China has really become a strong part of that global supply chain. And that's given them an advantage that I think, in terms of where we're going to see technology unfold in the future. I think Chinese technology companies, while they're not on the cutting edge of every industry within technology, and I have tremendous respect for some of the innovators in Silicon Valley that are continuing to push that boundary forward, and the basic research into sciences going on in universities like Stanford and elsewhere where technology is a huge focus, MIT, another one. Those schools are creating a lot of value, but the ability for that ecosystem of technology supply chain to support China catching up, or China adopting technology that's at the cutting edge of where we are today, I think gives them an opportunity to really keep pace and continue to innovate in ways that might be surprising to many in the West, such as we saw when DeepSeek came out in January with a model that surprised a lot of people in terms of how much China could be competitive with Western AI firms.
So I have this bigger question as I'm listening to you, and I'm trying to frame it in my head. When I was graduating from my school in Paris, the paper that I wrote was, you pulled it out of a list. My question was about globalization in the United States. And we're at a peculiar time. I feel like I'm 44, and most of my life the world has been opening up. I was born in Cold War Poland. Poland was behind, on the wrong side of the Iron Curtain. And I just saw the world open up. EU expand, NATO expand, borders come down, trade open up. People could move, ideas could move. And then we had internet, which made the moving part even easier, spreading part much easier. And I want to tie it to the US-China relations and how you see that. And individual businesses as such. When I think of innovation these days, if an idea works in the US, in 5 minutes, it's a global company in the tech world, especially if it's software or a service that's not really location-based or tied. China has a different take on it. I think it's protecting its market from outside. And then Chinese companies, maybe because of that, I don't know, have a harder time to go as global as some of the US equivalents could have or can. Can you tie it back from like individual company with a potential to go global and the framework of US-China relations, at least for the moment? It looks like it's the opposite of what we've seen over the last few decades.
No, completely. And I think you're right to begin with the idea that we really have had an increasing globalization, integrated global economy, particularly on the technology supply chain side of things, that has been a huge boon for society. The cost, the ability to have a supercomputer in your pocket for $1,500 is something that every generation before us would have thought was a dream that could never have been realized. And that's been made possible by the US-China economic relationship and that deepening of the supply chain ties. I'm personally not quite ready to say that era is over, and maybe that's my nostalgia for the momentum that I've seen over my career. I think certainly during COVID, there was a greater appreciation for the fragility of our economies created by such a deeply integrated global supply chain. So when we saw semiconductor orders basically drop and, there be some shortages in certain key components that people, particularly in Detroit and other in the auto industry in Detroit and other places start to worry about, can we get access to these goods if there were to be a political conflict or another sort of global supply shock like the one that we saw in 2020. But I would say at the same time, we should expect prices to go up and there to be some greater cost in the global supply chain. The openness of global markets has been a huge benefit for U.S. companies, and I would maybe push back against some of the talk out of Washington about how the rest of the world might have ripped off U.S. society. There's been such a huge amount of benefit that's flowed to the U.S. consumer from the global integration and the spread of globalization in terms of the ability for products to sell into Europe and to Asia, and the benefits we've gotten from low-cost inputs from those economies has been really meaningful and I think important for the U.S. So I would, we'll see where that political conversation goes and how it evolves, how much of the current discussion around tariffs is a longer-term part of this rolling back of globalization versus negotiating for deeper globalization, which I think could be a surprising outcome that we may not really be able to foresee in our short time horizon, but could be something that could materialize in the longer term. You mentioned how China's economy is not as open to U.S. technology companies such as Facebook or some of the other, big Silicon Valley tech giants. And that's true. I would also remind everybody that the U.S. is not maybe as open as we would like to portray ourselves. For example, electric vehicles from China are not allowed into the U.S. market, whereas they've dominated markets in Europe and other places around the world, particularly where they can be very cost competitive with European brands and U.S. brands in other markets. I would also point to the saga over TikTok, which is a company that, there are concerns about whether China uses it as a spying tool or can use the data that they collect in certain nefarious ways. You may have heard other governments around the world beyond the U.S. say the same concerns about U.S. technology companies, right? So having Facebook operating in or Twitter operating in China, is that data then going to be accessible to the U.S. government? So I would just make sure that we put everybody on an equal footing when we discuss, what is protectionism and how are different countries protectionists. The limitations on technology being exported to places like China, whether that's considered to be a protectionist policy, is something I think worth considering. But I do hope that what's happening right now in terms of some pushback against the depth of integration of global supply chain does not spread over into a larger conflict or a deglobalization of the world economy. I just think that that's not going to benefit the world over the long run. And while we will inevitably expect some backtracking on that, given how there are some national security concerns, I do hope that maybe in the future there's a different outcome, which could be that lowering trade barriers across the world becomes really the final achievement of this sort of period where people are rethinking the global trade regime.
I'm smiling because I'm thinking how, and I mentioned it to you before we started recording, when we thought about planning this recording, tariffs were not the hottest topic yet. And it's funny, by the time we were recording it, it is the hottest topic. And maybe by the time this episode comes out in a few weeks, it won't no longer be the hottest topic. Who knows? But that's the speed of change in news these days. So it's fascinating. I'd love to think of this podcast as being as evergreen as possible, but we do touch on things that are happening right outside our window at times. But it's a fascinating point that you make, that whatever friction is happening right now, because that's how I would describe it, the outcome might be actually more, what are the two sides asking for? You could actually argue that they're asking for more openness, right? Like better access mutually to each other's markets in various ways. So as much as it can be understood as a step away from what we've seen the last few decades, in which the world opened up more and more, to maybe it's just a speed bump into a world that's open to each other in a new way, refought, who knows. But the whole topic, I know, is very sensitive. I think it's much more nuanced than people think. It's not just, 10% of tariff or 50% tariff. I think there's, what are you actually going to ship? What are you going to import? And on and on and on. Putting a tariff in place doesn't immediately create a shoe factory in Connecticut. And that's a longer conversation. But anyways, I'm glad you presented in an optimistic way, and I hope the world finds a way to interact with each other in a productive way where everybody feels like we're all winning in this. I have many more questions about all the topics we talked about. I'm very curious about AI, and I do want to sneak it in. You're at the forefront. You're working with students that are learning to invest, and you said they have many more resources than probably you and I had 2 decades ago or more when we jumped in. AI is changing, even in my world, how I interact with information, even with the written word. How do you see students, their work changing with AI? Where do you draw the line? Where do you invite more?
Completely. And I think embedded in the end of your question there was, how do we stop students from using AI too much? And I try to reframe it in a little bit of a different way, which is I really want students to embrace AI as a tool, just like a calculator is a tool that replaced doing a lot of manual calculation techniques that so many people did in mathematics programs for centuries. We have this powerful tool that helps us to have a shortcut to get to some of the answers. And so I really encourage our students at Fordham to embrace AI, and not just to put in something and get an outcome, but to really understand the prompts and the way that you can engage with asking the right questions. And maybe this is the journalist in me coming out, the importance of asking the right questions in a research process. But I think there's a really powerful powerful method, but also great value in refining your questions to interact with AI to get the right types of output. And I'm not a believer in AI today replacing a fundamental research process or, making it so we no longer need investing analysts to look at companies. But I am a believer that it can help make the best investors better. Mm-hmm. And I mean that in the sense of it can help shorten your time you need to get up to speed on an industry. It can help you to very efficiently compare how language might have changed in historical documents. One of the things that I think smart investors normally will do is compare the risk factors that companies disclose in their annual reports or other documents. And when you can use an AI tool to compare that, how it's changed over 10 years in an instant, it saves you a lot of time going through that process. Now, I still believe and I still encourage our students to build their first model by hand, just so you get familiar with the numbers and what the numbers mean and inputting those in. But when getting up to speed on the industry, AI can be really powerful in terms of introducing you to different sources you might not have considered, making you aware where data might exist that you hadn't previously expected, and just scraping the internet for all that information that none of us has the time to do. And at the same time, also being able to help you when you have very specific questions. I've always found, and this is why AI has replaced a lot of where I used to use the Google search in the past for research, is that being able to tailor a question or having a prompt that's much more detailed can point you in different directions and be much more efficient than a Google search, which might lead you down the wrong track, in a certain direction that may not be exactly what you're looking for. So I would say today, AI is really valuable for all research analysts to develop a comfort with, really be able to use it effectively, and at the same time, not to just believe its outputs, use it as a starting point. It's a beginning part of your process. It's not the final way to go. And, use it as one of the tools in your toolbox. Don't be afraid of it. Embrace technology, embrace change, but don't trust it as the final answer on an investment process.
I like the idea that it can be a very empowering tool. And you talked about the source. It's very important to know the source. Where did it come from? And I think it's still very important to know, how would you find this if you had to find it yourself? And even if you get the output, how do you go and look it up just to double check if that's exactly what the company said or what was disclosed? I like the aspect of quality of questions. And I was thinking about a bigger picture idea and what education means. And I spent a lot of my education memorizing things. That's how I remember a lot of high school. I love history. I'm not good about remembering dates, but I'm very curious about the social change, why this king raised to power, what happened next, why there was a revolution and this king lost his head. I mean, I was just fascinated with the nuance, what is happening to an average person in that time. And then lately I've been also exploring different authors that were writing at the time and how their writing, their books were influenced by what was happening. Anyways, the quality of questions at the end of the day will give you better answers. And I think this is such an amazing feedback loop where we can actually teach ourselves to ask better questions because we get the wrong answer or an answer that's not complete, and we can go back and do it again. I'll mention real quick, I remember my first years at an investment firm in New York, and I brought in a couple of new software solutions to a firm that had some senior partners that were in their 80s. I was 24, 25. And one of them pulled me aside, an older man, very kind, and he says, "What is it that you can do with this that I couldn't do with a legal pad and a pencil when I was your age?" And I said, "Nothing, but I can do it in a fraction of a second, not in a whole afternoon. And guess what? Your competition is probably using it. So if you're going to stay with the legal pad and a pencil, you'll fall behind." So that was my revelation, and still applies, 20 some years later.
Completely. And the ability to, to your point about learning about history and continuing to engage with that, pattern recognition is still one of the most fundamental parts in an investment process, and understanding where, I think that's what makes you such a great investor, is your study of history and looking at those episodes and why did this happen. It's not remembering the facts. The facts, as you point out, are even easier for the infinite data supply of the internet or the AI models to have. But your ability to recognize those patterns within those facts, I think, is really what makes the difference and what can make a great investment work.
And I can only imagine we have a whole new generation of investors that will be better investors. They'll have the distance between them and the information will be shrinking. This is the worst AI we'll ever have. It will only improve, right? So I can only imagine how the data is out there about everything you can imagine. There's a lot of public information out there. Getting to it, sorting through it, and finding it, that's the hard part. And at the end of the day, you have to draw your own conclusions. And I've seen two very smart, seasoned investors look at the same data and walk away with a different impression, right? So the human aspect will be still there. Whoever pulls the trigger and buys or sells. Rick, I have one last question. How do you think about success?
Yeah, great question, Bogomil. I think everybody has their own framework that they use. So mine is just for me, but I'm a big believer in designing your life and the power of creating a life that you want, not just finding a job, so to speak, and doing it and receiving a paycheck and going home. I really believe that to have a meaningful and a good life and a successful life, you need to put some thought into designing the way you want to interact with the world. And I think the first element of success in life, I think, is enjoying what you spend your time doing most of the day. So enjoying your work, doing something that you find motivating, that gets you up in the morning, that makes you passionate about what you want to do. For me, that's teaching and investing are two things that really get me motivated to wake up in the morning and put my energy into it and work hard. You have to work hard in whatever you want to do to be successful. And if you don't enjoy doing it, you're not going to be able to put the time in to be successful. So I think that's really important. I think the second is to have something in your life, whether it's your work or something you do outside of work, that gives back or pays forward the benefits that society has given to you. I think more than just paying our taxes, I think we need to find something that's meaningful and contributes to others. So for me, teaching obviously is a big part of that, and helping young people to be successful and achieve their dreams. There's nothing more gratifying as a professor than to have one of your former students reach out to you and say, that advice that you gave during our mentorship lunch really made an impact on me 2 years after I finished your class. And that's where I go, okay, this is worth it. This is meaningful. This is a way to give back and pay it forward for all the great people who've taught me throughout my life. And then the last thing that I think, to be successful in life, you have to continue to learn, and to tie it back to our beginning, curiosity, right? Curiosity, continuing to explore, to try new things. There's a lot of elements of life that get repetitive. The older you get, you do things over and over again. And I believe that, having some patterns in your life is good and gives you consistency. But being willing to go outside of that, whether that's through travel, exploring new hobbies, learning something that you would have never have done before, trying different food, meeting new people that are experts in something that you have no background in. So every time I'm at a cocktail party and I speak with somebody who's a doctor, I want to learn about medicine and science and things that I don't know anything about, and being willing and comfortable to engage with people on a topic that you know nothing about, and being genuinely curious and continuing to learn, I think creates a lot of richness in our lives. And whether that's, and that goes beyond richness in terms of money, but richness in terms of your experience. And so for me, enjoying your work, giving back, and then continuing to stay curious and find ways to learn are the three markers for me of a successful life.
I love the sound of that, and I can tell that you love what you do. I can tell that you have a wonderful impact on so many people in your life. And I love the aspect of learning, because I can't see any other way. Just as I told you, I want to understand, and I want to understand things that are close to the area that I'm familiar with, and then I'm very open to learning new things. And these conversations, spending an hour with somebody like you that spent so much time in a different part of the world, has a different perspective, and now you're spending all this time with students, learning from them in the process. It's so fun for me, and I think this audience will enjoy this conversation and see it as an evergreen content that they can go back to and find relevant in their lives. Thank you so much for today. I really appreciate this conversation.
Bogomil, thank you so much for having me, and I really appreciate you as both a friend, a professional colleague, and also somebody who's adding to the world through your podcast, Talking Billions. And so really grateful to be a part of the communities that you're building, the podcast Value X Charlottesville, and I look forward to seeing you very soon.
Thank you again.
You were listening to Talking Billions. We talk about big ideas, big inspirations, big topics. We take on the hardest subject of all, money. But our conversations lead us to an even bigger question: what it means to live a rich life beyond money. If you enjoyed the show, please take a moment and follow, subscribe, rate, and share with friends and family. We rely on word of mouth to promote the show. One click for you means the world to us. Thank you. Until next time, your host, Bogomil Baranowski.